Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London sugar markets. I'll start with ice raw sugar in New York. The core of the bullish support here for the last few months has been the lower tine of the December 2020 to April 2021 bullish shift pitchfork, currently at 1785. I've highlighted the whole bullish pitchfork in blue, dark blue, so you can visualize the tines more clearly, as they will become more important with regard to the last 3 weeks' actions. This lower tine caused some very prominent rises in the market, most recently in late October, that saw the market gap higher and push up over all the moving averages. The significant February 2021 high at 1894 as well, the congestion at 1964, and finding a middle tine of the same big bullish shift pitchfork, currently at 2010. Prices peaked at the congestion at 2047, last seen capping the market back in April. I'd also previously highlighted the August to November bull channel in red to help visualize this, as prices punched up and closed over the upper bull channel line, currently at 1884. The reason for highlighting this is that I also detailed some potential targets topside for this pattern. Thus, we had initial target X in the 1990 area and a secondary harder to reach target X1 in the 2020 area. 3 weeks ago, the market rose up all the way up to reach the secondary harder to reach target X1 in the 2020 area. The market did not sustain this seemingly strong move higher, dropping all the way back down to just short of the late October to mid-November 50% Fibonacci line, so basically the current move up at 1902, for bouncing up last week. I'm again curious on what this recent action might be. You see, it could be seen that the whole late October to date action is indeed a bullish halfway hesitation, in which case we might see a resumption of the move higher and even a possible bullish halfway hesitation with potential right off the top of my daily chart in the 2190 area. Or, alternatively, it could be that the market moves up but fails again at the 20.5 area and drops back downwards and forms a double top with all the opportunities that may present. Right now it is a little early for either of these ideas, and of course something else may present itself. And this is where something interesting has been happening today, such as the possibility of last week and this being a bearish cat's ears pattern. But we have to wait and see how any of this develops, as I suspect the market has not yet made up its mind. Ice Europe white sugar in London. Changeovers. Changeovers produced some strange events here. Since mid-September, this market has been dominated by the one action, changeover gap, that happened back then. I'm going to say a lot of things about what happened beforehand, but that changeover gap here on a continuous daily chart is really big. There has been a number of attempts since, initially tepid in September, but more active in recent months to try and fill it. The latest attempt back in November made some great strides in filling the gap, but it ran short of it because of another changeover that ended up with an island top and another gap between 552.80 to 561.30. We've since then seen prices fall away on the daily continuous chart below all the moving averages. Yet we've also found that prices don't like it down there either, with some interesting support from the 50% Fibonacci line of the July 2021 to September 2022 move at 522.80. This has, to be honest, left the situation a bit up in the air, as between the support at this 50% Fibonacci line and the resistance overhead from the medium, currently 544.60, and long moving averages, currently 545.10, well, the market went batting back and forth, in this case 2 weeks ago on the Friday, ending up as a sixth countering intraday pattern. A bearish engulfing pattern and bearish opening long black Morozov. Even today, we are still in between these two capping forces. The capping March 2017 high at 548.70 and the support 50% Fibonacci below at 522.80. Nothing's been sorted out yet as we enter a fourth week here of this action, and this recent action stops repeating the contrary actions every second session, then I don't see an end to it. Something will give soon, but not sure just when or which way right now. Sugar white premium spread. This continues to be a very colourful chart with many things going on at the same time. I'd previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews picture from 2019 to 2021 highlighted in dark blue, with the market currently in between the lower time below, currently 81 3/4, and the middle time above, currently 156 even. Though breached in the past, this is still showing a bullish angle of attack. We also have an ascending expanding wedge pattern highlighted in red trend lines that has been formed since mid-April to late November, and that's currently 146 3/4 till right off the top of my weekly chart. To me, it was and is still not the best looking of such patterns, but it is also still there, and it comes with all the possibilities such a pattern can invoke. Subpoint to this has been the monthly key reversal down we saw in September. Despite what has happened since, which seems to justify this selection, please still take this monthly key reversal down with a huge pinch of salt, as the earlier monthly key reversal down we saw in July did not work out so well. Nevertheless, it seems to be genuine. The most recent activity has been the small reactionary move back up 2 weeks ago after the prior week's counter to the counter weekly key reversal down, which offset as it does by a country mile the next previous week's immediate countering bullish engulfing pattern, which in turn offsets the next previous combination and supports the earlier bearish engulfing pattern. The recent capping top had been the neckline of the big June 2021 to May 2022 reverse head and shoulders pattern, which I've highlighted in bright green on my daily chart, and that's currently at 143 3/4. Interestingly, recent action justified part of my commentary I'd made 4 weeks ago, and I quote, "Below the long moving average, which is currently 123.5, we have really nothing much until the late April, early May congestion based around the lesser Fibonacci lines at 104.5 and 107.5. The core of this congestion is in the 102 to 107 zone." End of quote. I actually continued then after that, and I quote, "So with all these actions and points, it's time to look at possible targets below for the break below the ascending expanding wedge pattern. Thus, a potential target X on the downside would be in the 102 even area, just below the late April, early May congestion." End of quote. 3 weeks ago, prices dropped down to reach target X at 102 even. They actually ended up quite a way below it, but due to overrunning. However, I was mindful back then and since that we were approaching the lower time below that, currently at 81 3/4, and again highlighted in dark blue on the big previously mentioned 2019 to 2021 bullish Andrews pitchfork, as well as the neckline of the February to September 2020 head and shoulders top, currently at 75 3/4, which is slightly below the lower time now, which I'd highlighted in pink. I suspect this one might be important, hence the highlighting. In case you are interested, the secondary harder to reach target X1 for the expanding wedge pattern is way down in the 46 3/4 zone. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.